Hello, it's Monday, coming at you live here at Inside Production Studios in Phoenix, Arizona. My name is Robert Morales from RCO Network, and today is Monday Market 15, the 15-minute show that takes about 30 minutes or whatever. Bringing you the most up-to-date information about the Phoenix housing market. We'll be taking questions here live on the broadcast, so if you have any questions or comments, go ahead and put those in the comment section below. If you like what you're seeing, get the like button, but if you love it, give us a little heart, because, you know, what else is your thumb going to do right now? Also, if you're on YouTube, like and subscribe us, because we want to help you, help each other, help everybody out. So, hello. I'm flying solo today, and I have everything in front of me trying to... Here, hold on, get rid of this. Trying to get everything together for you guys, more information regarding the Phoenix housing market. Phoenix specifically, because that's, you know, where we live and breathe. Ashley is a little bit sick today, a little bit under the weather. So I'll be taking things by myself. I do have a studio guest, but I'm not going to, you know, embarrass him so much because he didn't ask to be part of this stuff. So he's going to be watching, critiquing, laughing probably incessantly, and I'll be wondering what the hell is he laughing about. So, but to the item at hand. So hello, Jennifer. If you have any questions, like I said, in your comments, go ahead and put those in there. The information is really, there's not really a whole lot going on, but a whole lot going on at the same time. So last week, national unemployment numbers came out, 6.1%. We missed it. You know, we were supposed to have projected at 1 million jobs in our economy coming up brand new, but we undershot it by only having about 266,000 jobs come. So I'm going to start off with unemployment. Unemployment is very important because it's a key indicator in how much growth there is. If there's no jobs, there's no houses to buy, or there's no reason to buy a house in an area that you're not going to work in. So, I mean, it's really directly, indirectly correlated with the housing market. Hey, Clement, how you doing? So I'm going to go straight to that. So if you look at the Fed numbers, I'm going to put this up real quick here. So Fed numbers, let me get that out of the way. Yeah, get that out of the way. So Fed numbers, initial claims have been going down since last year. As you can see, during the peak, crisis time, back in about March, April, we had a significant number of unemployment claims filed, and it's been dwindling and slowly decreasing over time. That is, again, a very key indicator of how our economy is doing locally, and this is the national number, and how growth is being reflected in the area. So if you switch over to Arizona unemployment rate, we're looking at a number around 6.7%. And as you can see, between November all the way to March, we've been somewhat stabilizing. You know, November, December, you do see a pickup in job rates just because of, you know, the Christmas environment, you know, people hiring just because of seasonal help, all that stuff. And as you can see, since the end of last year, we've been fairly stabilizing, which is a good indicator of where we're at and where growth is going. Is it stronger than I think most people want? Well, you know, it could be better. Let's just put it that way. It could be better, but it is what it is. And so these are only reflective as in March. Let me get back here. I don't have April numbers. These are always 30, 60 days behind. So this is the current, but again, it's reflective of how things are going. And the big question, the really big question I think everybody wants is, you know, how is the housing market now? You know, if you're a buyer right now, you're chomping at the bit, looking at every type of, every YouTube channel, you're looking at every news article with any small hint of like hope that this housing market's going to get back into normal. I don't know if there's ever going to be a normal, but, you know, we just go with the numbers. I go with the data. So is there going to be a housing crash in 2021? This article, it reflects on both of those, weighs on both sides of it. But that's really the big question. Are we going to have a crash? And that's a really hard answer for anybody to answer. You'll see, like I said, you'll see YouTube videos that will either, depending on what you're looking for, you'll see YouTube videos that say yes. You'll see YouTube videos that say no, this housing market is strong. You'll watch like mass media like MSNBC or Fox, whatever your political side is, and you're going to find an answer you're looking for. Which is unfortunate because, again, it's really emotions that dictate us and really direct us in the information that we find, which is unfortunate. But hopefully, you know, I bring you just numbers here and, again, local numbers, and you can hear it straight from the horse's mouth because, you know, I do this all the time. Again, if hey, Jesse, if anybody has any comments or questions, go and put them in there, and I'll try to answer them as we go along. Raw numbers. So let me get there. So every week I've been watching the demand index. The demand index takes about 20 key indicators that reflects people's demand in this housing market. And every year, or I should say every month, I've been watching this slowly creep more and more into a balanced market. If you guys remember, red means bad, right? Or red means that there's not enough demand. Green means there's too much demand, and yellow means there's a balanced market. And just like the supply index, green is not good. Green means we have very little housing, and then supply means we have too much housing, or the red has too much housing. So you really want that yellow balanced, even kind of growth. You know, if you're a person that owns a home, you want that stable growth. You don't want dramatic changes in growth. If you get dramatic changes in growth, it could potentially swing the other way, and I think that's what a lot of people are waiting for, that big swing back. You know, you're seeing percentage yields 10%, 20% year over year, and that's a tremendous swing upward. And if you're selling a home or if you own a home, that's an exciting place to be, because you can kind of see the values, like either on Zillow or Redfin, if you're not talking to a realtor, see those values just shoot right up. But that's unrealized gain. So as much as it is to talk around, you know, like the Easter table or around Mother's Day, or like talking about how much your house has made over the last year, it's unrealized gain. So you really haven't, until you sell it, that's what you're going to make off of it. And that could be, if that's this year, you're going to make a tremendous amount of money. If people who anticipate this housing market is going to crash, then that unrealized gain may be very diminished at that point. So what I want to reflect upon is this demand index has been declining. Why that's been declining, it's hard to say. You know, I think a lot of people are getting priced out of this market. Me especially. I mean, I've been looking for a house for the last, I want to say 6 months. Let me go back to this one. So I've been looking for a house for the last 6 months, and I've been priced out. You know, I have a good amount of money. I have 20% down, you know, just a little bit over, enough for closing costs, all that stuff. I have money that I've put aside to that, but in this market, it's so unstable. It's so like, it's so volatile right now that all that money I saved is going to go to overpay a house, because that's the only way I'm going to win this thing. So, you know, the last offer we made, I think, was on a 425 house. We considered placing an offer of 440, you know, which diminishes that 20% down by $15,000. So that put us, you know, more at the 10% range, which sucks, because then that means we have to pay mortgage insurance. So there's a lot of things that, you know, this market is just not viable for somebody. And let me go to the next one, the next slide, so you guys can see. Let me get out of here. So new listings have been, over the last few months, the historic, or the issue, having enough supply. People aren't putting their house on market, and as you can see, I went back to 2018, because I think that's really, between 2019 and 2018, that's really the marker of supply right now, and to reflect on 2020, to kind of compare this year to 2020 is kind of weird. It is, because we had the pandemic starting, you know, roughly this time last year, and we saw, as you can see here, back in week 12, just a complete drop in listings all the way down to like 1,300. And don't pay attention to this week 19 number, because we're in week 19, so this is only what's been listed so far this week. You know, so this number here, that 1,500, is as of last week. So you'll kind of see, comparatively, listings have been somewhat stable, you know, roughly, relatively, within, you know, just a couple hundred here, 100, 150. This was 2020, so you'll see drop there. But relatively speaking, you'll see kind of a fair amount of listings that are coming up. So, you know, how that reflects on demand, there's just higher demand. I had a question from the audience. So hold on a second. My studio guest had a question. How can demand go down but the supply show a shortage? How can demand go down but the supply show a shortage? So I think mostly, reflecting on that question, it's because of price. You know, prices are elevated so much, to the extent that people are being priced out. Even myself, I'm being priced out. I qualify for up to the conventional loan limit. Conventional loan limit is about 540-ish. You know, I don't know the exact number. I don't really want to go that much, because I don't want to overextend myself. And I believe people who are just looking for primary homes, looking to move in, not investors, are getting priced out of this market. investors who have cash. I've seen a lot of cash deals right now just going through. Investors paying just complete cash for homes and paying over because for them that's a hedge against inflation. If you're into economics and you're into market volatility and you're an investor, and it's real estate, gold, and some other commodities are good hedges against inflation. If you anticipate the economy being inflated, then that's a good hedge against that. So you'll see, because we're having 10 to 20% year-over-year appreciation, the dollar being devalued, I think inflation has shot up. I mean, inflation normally about 2 to 3% year-over-year. I think it's anywhere from like 5 to 10% now. So even though we're getting stimmies and we're getting money from the government, it doesn't really go towards anything. The value of that is really not reflective in the prices that we're paying. So just because we're getting money doesn't necessarily mean we're not paying more, for the things. And you see that. You see everything just going up in price. So moving along. Here, let me go back to that window. And this was the big one for me. The beginning of the year, median prices of homes were running around like a date 2020. The median price of homes is $350,000. And I want to say I was going to say about 3 or 4 years ago, we're running about 288, and this is 1 year 307, and this was last year 350, and now we're shooting up to 405. This is not necessarily sustainable, Even in 2007, 2008, when we had, the Great Recession, the other housing boom or crash. Even then, we didn't get to those highs. This is extraordinary. This is just way beyond, I think, maintainable. So this is something, again, if you're a doom and gloomer, that you're waiting for that crash on. But if you're thinking that the housing market's going to stabilize, I mean, this is reflective of that. I mean, it hasn't stopped. On to the next one. So I did want to, let me go back to me real quick. I did want to reflect a little bit about, people overextending themselves. I think in this housing market, people are overpaying for houses and overextending themselves. That little nest egg that I had that we've built, that $40,000, $50,000 nest egg that we built that we're going to apply to a house is, again, slowly diminishing. I should say rapidly diminishing, because every house we put an offer on, we're just getting underskirted because we have somebody with cash. And that's, I don't want to overextend myself. I guess that's the biggest fear for myself, as well as anybody else out there looking for a home, is that I don't want to see people overextend themselves. So if you have an agent you're working with, have them run comps, have them run numbers on houses, because I'm seeing a lot of listings that are just overpriced. I saw a listing this weekend. The comps were running between 380 to 410, and it was listed initially at like 490. And then they ended up taking a price drop, I think to 469, and we made an offer at 400 because we felt that was fair, and then we got rejected, And quite literally, I think there'll be somebody out there that pays for that. It's amazing to me that people are out there are paying these prices, but I don't want to overextend myself. And the client that I was helping in that transaction, I didn't want them to overextend themselves, because it's not worth overpaying for something and then losing all the money that you've nestled and put together. Losing it all in a house that you can't realize the gain on, even if you dump all that money in there. And this is somebody coming and purchasing a primary home, not an investment. If you're putting all that money, that $40,000-$50,000 nest egg in that home, you can't pull it out necessarily, because I'm almost willing to bet that appraisal is going to come under that offer price. And in order to put a lien against there, or refi, or do a cash out refi against your home, or do a second line of credit against your home, you can't, because you just overpaid for a house. And it'll take several years for you to build enough equity in there so you can lean off against that or utilize that if you need to. And so that's the concern, especially with inflation too. Inflation, as prices rise and you've just overextended yourself, you have one downfall, you have one car accident, you have one medical issue, then that's going to kind of wipe you out. And guess what? Your house is kind of leaning and going towards that foreclosure market. But so that's leading me to the next thing. The next slide, please. Hold on. That was supposed to be a laugh. Anyway, so what I wanted to show is just notices of trustee sales. So as you can see at the beginning of last year, before all the craziness started, we were filing notices of trustee sales in the 388, so roughly about 400 a month or a quarter, I should say. So people not being able to pay their mortgages, and they've got that 90-day letter saying, hey, if you don't pay the mortgage, we're gonna file foreclosure against you. That's what the notices of trustee are. And it refreshed on me. But as you can see, I'll finish the slide. As you can see, it dropped, diminished because of government intervention. It's going to take forever to reset that. But it's diminished tremendously because of government intervention. And I don't know where that's going to lead. So the biggest aspect of not knowing where the housing market is, if there is going to be a significant pullback, if there's going to be a change in the housing market, is one indicator is these notices of trustee sales. Also, too, this is they've gone beyond the notice and they're actually filing for foreclosure. That's what these numbers reflect. And as you can see, people going into foreclosure towards the last quarter of or the first quarter of last year, we were looking at about 39 every quarter, and that diminished to about 5 to 10, maybe 20. So you can kind of see it diminished a lot because, again, of intervention by the government, which in some cases helps out tremendously. I think there's some families out there that do need that support, that do need that help. But as far as letting natural market cycles happen, this prevented that. This prevented a lot of those foreclosures. So a lot of those investors picking up, a lot of people out there that who are looking at buying in houses. I think the people that want to buy a house are kind of waiting for this market to turn, and this is one of those key areas that people are looking at. Because I do get calls all the time regarding, do you have any houses that are clunker houses? And I did have one last month, but they're becoming far and fewer in between because people realize that they can just list a crummy house on market and get full value. The house that we listed last month, we listed at about $210,000. There was a number of cats in there. We had a lot of work, a lot of cleanup. We had to ozone spray it. I mean, that took a while to do, and we sold that for $12,000 over list price, which is amazing to me because I didn't think we were even gonna get the list price, but we got cash. And there's a lot of people out there for that. And because of the situation, they had to use a realtor, and they used me, thankfully. And we got them going on that. But again, one of those indicators where it's still a little bit crazy out there. I did see this article too. I'll post this real quick. More intervention. If you go to the website here, the phoenix.gov, it'll give you some information regarding kind of Phoenix's housing plan regarding this situation and kind of what they're doing. Again, another intervention from a local government versus a federal government. How this plays, you have to my personal take is you have to let markets kind of fix themselves, and having, housing intervention, whatever this is. I mean, I did see in the article, the thing that caught my attention was more or less like a 2-bedroom apartment. Let's see. According to Arizona Housing Urban Development's fair market rents in Arizona, the cost of a 2-bedroom apartment is $1,097. And I'm like, I don't know how true that is, because then that led me to pull up this number. So I pulled up just regular residential rentals, active in the Phoenix area. I brought up 40. I don't know how average this is, but the crazy part is, the housing market is very driven by demand. Even though demand index is decreasing, people who can't buy houses are out there, renting, pushing the rental market up. And it hasn't stopped. So the point of reflection, the things that I want to bring up, the things that I wanted to talk about today were really emotions. Do not let your emotions carry away with you. And I think if you have a good agent or even a good friend who's out there helping you shop for a house, either for rent or for buying, that they really consider your situation, because it's so hard to trust your own emotions when those emotions are leaning against finding a place to live. When you're up against the wall and you have to be out of your place in 60 days, you're just inclined to pay for whatever's next. And I get it. I get the fear of that. It's tremendous. Not having a place to go, especially if you have kids, especially if you have a family that you have to take care of. The emotions are hard to negotiate, especially in this kind of environment. And then if you're looking for a purchase, depending on the loan type, there's very far and few accepted offers on VA and FHA. I don't see too many USDA anymore because you have to be way out there. But I'm seeing a lot of cash and conventional, and those are well-qualified buyers. So on the good end, we are selling houses to well-qualified buyers cash. Do I believe there's going to be a housing crash? Me personally, no. I think it's going to stabilize, and it's stabilizing merely because of price at this point. If you look at the prices, I mean, at that 405,000, we're kind of seeing that demand index kind of stabilize because it's getting into that balanced arena. And I think more because of the price stability. I mean, thankfully I have a place that I purchased about 5 years ago. It's a little condo, a little 2-bedroom condo. And I've been leaning on that, and that hasn't pressured me to find a house. I'm finding a house because I'm mindful of the future. I'm mindful for growth in my family. I'm mindful of my investment. But in an environment where prices are just so elevated, I'm not willing to overpay, 50, 60. And I've seen up to 100,000. I even saw an article for $1 million over list price. Craziness. So really have that person in your life that's going to give you that gut check, going to punch you in the stomach and say, hey, don't be doing that. You're crazy, man. Why are you overspending on a house? They're really going to be mindful of your situation. So that's the other thing too, is just, I believe the housing market is stabilizing or hopefully stabilizing enough where I can buy a house. At least that's my point of view. I do believe there's other areas and things where prices are going to continue to rise. That's all in part of government intervention. There's so many things to consider and so many things to think about. The two things, again, lean against a trusted agent and a trusted friend, and don't get too emotional about things. And does my studio guest have any questions? Because, nope. Oh, he said no. Because we're going to be ending the show. I have about 30 seconds to say thank you for joining us on Monday Market 15, the 15-minute show that takes, today it was 23 minutes. So if you have any questions or comments, again, go ahead and put them in the comments section. You can call me. My phone number is on the bottom there. And we'll see you guys next week. Ashley should be back. All right, see you guys.